It is more top heavy than ever before, and it's causing massive amounts of volatility. But everybody seems to think that once we cut interest rates, everything will be fine. I'm of to believe that this is all baked in, and we're in for a lot worse of a time than people may think. And nobody's talking about the potential of stagflation, even though the stock market is covering up just how top heavy we are. Now, let's get into that, and we'll get into stagflation here in a bit. But if you take a look, the US technology stocks now reflect 38% of the total US market cap. This percentage has doubled since 2020. For context, this peak was at 33% during the dot-com bubble. So that's nearly 5% more top heavy. And on top of it, we're having margin debt absolutely skyrocket in flight, where US investors took out another $67 billion to bring in margin debt. The total on record is 1.13 trillion. This is 5 times levered the Bitcoin ETFs that they've proposed to the SEC. Now, this is very interesting because leverage has doubled over the last 2 years, and it's been very much so where they're seeing the stock market absolutely take off. So the reason why everybody's going leverage is essentially you could just throw a dart at the board and say, hey, yeah, this is going to work. This is going to make money. Let me just take out a loan because it's so easy to invest in the stock market, right? That's where I think we're getting into some deep hot water, because at this point, everybody just seems like it is easy to invest in the stock market, which it shouldn't be the case. Not everything should be just absolutely taking off. Now, as a percent of GDP, this margin debt now is below the 2021 peak. Needless to say, the risk appetite is stronger than ever. And now everybody wants that piece of that AI. And this is where I think investors are getting a little crazy as well, because everybody thinks that AI is now this revolution where people are going to start being way more efficient than they already are, and that everything is going to be peaches and daisies. We're going to start to see efficiencies like we've never seen before. We're going to start to see things take off. Now, where I see AI going is that everybody is going to potentially lose some jobs, at least in the short term, in the interim. We're already seeing it with young college age male graduates, where they are losing or not able to find jobs very easily because those low paying jobs are being replaced with AI, or those higher up execs are becoming more efficient with the use of AI. So as we're seeing this revolution play out, I still think that there's a lot of time to really dive in, but everybody wants a piece of this AI. I mean, it's plain and simple. Everybody's looking at it similarly to the dot-com bubble. Now, if we continue to look and dive in deeper, this percentage is now twice as high as the 2008 lows, which is absolutely a crazy, because we have just such a high allocation of equities where if we have a stock market crash, well, that would send everybody's net worth down dramatically. It's 5 times levered ETFs were announced. And the volatility is everything from NVIDIA and crypto. So, of course, they're going to blame these top-heavy stocks. But if you really look at the overall short-term volatility of the market, it's all because there's just a few players in it. Everybody else, the S&P 490, as I like to say, is essentially flat, where that 10, the top 10 there, basically just the Mag 7 and maybe MSTR or some others, they're the only ones really doing anything in this market. And even MSTR is pretty relatively flat if you look at it. But either way, NVIDIA were to go down by 10%, this leverage ETF would go down by 50, literally 5x. It's insane. So if approved by the SEC, the ETFs will go live in 2026. So the risk appetite is just getting even more. And clearly the leverage deck skyrocketing to unprecedented levels. It's a surge in leverage that just shows how strong that momentum is. Everybody wants that heavy risk appetite. And this is where we get some sort of degeneracy. And everybody's looking at crypto with these large liquidations and the giant volatility. For those of you guys who have been here, know that I don't generally talk too much about crypto per se, just Bitcoin. So Make sure you guys are smoking that like and hitting that subscribe button for me. But either way, we're seeing some massive amounts of liquidations in various market, crypto being one of them, because it's 24/7, 365. So that just shows the risk appetite that's already there. And these spreads are just beyond that simple leverage that they're saying. The US options volume has reached 108 million contracts on Friday. So these call option volumes are hitting an all-time high. It's ridiculous. These investors taking a looking on outside exposure to markets in any other way. And that being said, the risk on mania, and they don't think the top is near because we still have a long way to go in all of this. And this is where I don't think the top is near either. But I do see a lot of similarities to the 1970s. Now, in the 1970s, we had gold absolutely ripped because we went off the gold standard and we went to more of a dollar-based fiat standard. Now, what happened in the 1970s? Well, we had massive amounts of inflation just happening, but then we also didn't have too much economic growth. So that inflation that was sticky, it didn't change, it didn't move. And this is what we're seeing right now with all of these prints coming out, all of the data being put out there. It all shows that inflation, well, unfortunately, it's here to stay and it's not going anywhere. So that word where they were initially saying that inflation is transitory, well, if it's transitioning just to stay here forever, I think that's the case because inflation doesn't seem to be going anywhere right now. So, as we keep on diving into this, you got to keep on looking at everybody's risk appetite. And it seems like these EV/EBT multiples have fallen to 27. So, it's the same as Walmart. But either way, investors are searching for any source of yield product to protect their spending power. So as the Fed cuts rates into stagflation, the US deficit spending exceeds 300 billion in the same month. So the US dollar keeps on declining, and this is that sticky inflation that I'm saying. That core CPI is still 3.1, PCE is 2.9, and we're just starting to see that surge come. And all of this with the surge, when you look at it, all of these other fiat currencies against the dollar, well, it's all because of leveraged debt. Now, everybody is flocking to the dollar to get more of these assets, and we're seeing the dollar actually do pretty well against a lot of these cryptocurrencies. But either way, the ultimate driver of price is that strong, strong belief in the dollar right now. And then Wall Street is ticking more records, and these technology stocks are absolutely ripping. So the stock market keeps on hitting new all-time highs, and it's not slowing down one bit. So as we start to see these technology stocks really take off, and as we start to see the stock market do very well while the dollar is doing poor, everybody's got to ask themselves, okay, what the hell is going on? And then if you take a step back and you really look at gold and all of these others, well, the writing's on the wall here, folks. And I've been saying to you guys for a long time that I really believe that we're going to be in an asset bubble, but we're not going to pop anytime soon because we're simply going to push more liquidity into the market, and it's coming very soon. So you guys know I show this literally every single time, and we still got some more stuff to go over. But in literally 12 days, we've got a 99% chance that we're going to cut 25 basis points. And the interesting thing is now we have a 1% chance that we're going to cut 50 basis points, at least according to the CME group here. So you're telling me there's a chance. But the reality is the market has already priced in 3 cuts. So I think that if we cut this 50 basis points, which it seems unlikely because there's only a 1% chance here right now, but if we do that, then we are going to see the market absolutely rip because the market has the appetite for this sort of thing. The market has been really looking forward for all of this, right? But, we still have one of the most top-heavy markets that we've ever seen. They're calling them the 10 Titans. I don't know if I want to date myself, but there's a show at one point in time called the Teen Titans, and this headline kind of reminded me of that. So with this, right, these stocks now make up 38% of that S&P 500. So why have anything else outside of just these 10 stocks? It really doesn't make any sense. And then let's get back into what I brought up at the beginning, the 1970s stagflation, how these are similar to these two different times. It's looking at stagnant economic growth, high inflation, and high unemployment. So, as I was telling you guys earlier, if you look at the unemployment rate, especially for recent male college graduates, it's extremely high. The unemployment rate and the jobs numbers keep coming out and they keep getting revised down. In fact, that revision that came out was literally 1 million jobs just disappeared at the snap of a finger. I couldn't believe it. How are you telling me that our data sources are so poor that literally 1 million jobs were just poof, vanished, written off the face of the earth? It doesn't make any sense at all. Now, if we continue diving in to what are the other similarities here, the oil prices shot up in 1973 and they had supply chain disruptions. We're already having that potential supply chain disruptions with all of these tariffs going on. Now, I'm not saying the tariffs are going to cause this, but everybody's saying, hey, the economy is headed for stagflation. But don't worry, it's different this time. How many times have we heard that, folks? It's absolutely insane. So TF in the chat is saying, hey, that 70s stagflation was caused by an oil shock, right? Similar to that cerveza sickness shock. Yes. Yes, I know, all-nighter hider. I'm throwing out some predictions here. The dollar severed its tie to gold well before the public announcement of 71. It definitely did, right? And the short term won't feel good, but market disruptions don't feel good till later when balance is found. TFSN inflation is here would be caused by the money supply going up, and that has not slowed down one bit. And, because of this is the layover effects of having all of that massive amounts of money printing. It's an extremely top heavy stock market. And that's where we get a little bit, at least I get a little bit nervous, because when you have just such a concentration and just such few players actually performing decently, well, if one of those guys, one of those CEOs gets pictured with his affair at a Coldplay concert or something crazy like that happens. I don't know where I got that example, but something like that happens. Well, that stock is going to absolutely tank. And that is a huge high percentage of all of the net worth in the United States today. And then, we also have the dollar literally having one of the worst starts to the year ever. Or I guess we can't even say start to the year because we're almost to the end of the year now. We're 2.5 months, 3 months, October, November, December. Yeah, 2.5 months away from 2026. And so sitting at 98, we're doing a little bit better, but year to date, it's one of the worst years in the Dixie history since they've been following this. The only other worst year is 1973. Yet, as I was saying, we are seeing massive amounts of growth in that S&P 500. So I would not be surprised to see this asset bubble still rip throughout this next year and throughout the rest of this year, because I think that bubble, it still has a ways to go before it pops. I'm coming to you guys live from Montreal, Canada. I was at a conference all day, so I hope you guys appreciate all of this. Yo, relax over here, man. All-nighter hider, Teen Titans, and Coldplay. I am wearing pants. I'm wearing jeans, man. It's actually really cold up here. I do have that slick back. I was wearing a hat all day, so it's the slick back hair is looking pretty good. But I have to throw out some references for you guys so you guys get a little entertained here. But I appreciate you guys all coming out. I will be traveling Sunday over across the pond in Europe. Big surprise is coming here soon. And I hope to catch you guys all at the next one.